Monday, July 24th, market analysis, Dan Ehrlich. I start out with stock market indexes, the SPDR, DIA, QQQ, and often the Russell 2000. And today, no exception. The daily data chart on the S&P 500 this morning so far, and it's 10:10 California time, a little bit after the middle of the day, is fairly strong. We're a little bit above Friday's high, but not above Thursday and the most important day, Wednesday of last week, which was the highest high for the rally in a resistance area. And it did start to come down very handily on Thursday. Now, Friday it rallied, but didn't hold it very well and ended up closing just about unchanged. And today we're bouncing back a little bit. We're up 2 points at the moment, which is not bad. Maybe a hair better than a little bit, but not anything super big. So if it's going to come down and close some gaps, which I've been forecasting, and it hasn't happened yet, at around 444, exactly 10 points, almost exactly 10 points lower, and it better start doing it quickly. Otherwise, we're going to see another sharp rally. Now, you know I'm basically bullish, and I am trying to, and oftentimes I'm able to pick some turning points for you, which allows some better entries, for example, or better offsets, whatever, more accurate trading in general. So I'm a little bit between a rock and a hard spot momentarily. Too much strength from this point is going to cause a bit of an explosion in price, I think, maybe another 5 to 10 points higher than Wednesday's high of last week. On the other hand, if we do stop, and let's look at the 1 minute chart where we are now, give or take a squeak, and it could, I mean, it's going sideways most of the morning, opened a little higher, popped up, came back down to almost unchanged, rallied to new highs, but didn't go anyplace, and now hanging in there at 2 points higher. So starting to trade at 453.70 might be the beginning of this 10-point break I've been mentioning. On the other hand, there's nothing I can come up with other than the high of last Wednesday to break through in order to get another surge of 5 or 10 more points. So what about the DIA? The DIA is already in new high ground completely ever since, wow, over a year ago. And I've been saying that off and on now for a week plus. So the DIA is as high as prices were April of last year. But they're right there, right at the April highs of last year, a resistance level. And it's been in this resistance level, the red zone, for about 4 days now. So the higher high looks real good, but it needs to get out of that little red zone I've got blocked off here in order to have less resistance and an easier, stronger, quicker rally. So if that doesn't happen, a dip down to 350, which is only 4 points, would close a very small gap. And there is a lot of support really starting at 344, which seems a little bit more plausible 10 points down. QQQ. And we have the gap closure that I talked about for a last few days. And the Qs now don't really have anything super close to come down and close. There is a gap at 369, I'm going to say, and we're at 76, 376. The low today is so close to being exactly right, 374.34, and it really should have been 374.19 for the low to close the gap exactly. But what the heck, you have 1500s. Good enough for government work. So we are now higher on the day by 40 cents after coming down and mostly closing the gap. And if it stays strong and gets stronger, well, the SPDR and the DIA are going to do the same thing, and we could end up with a test of resistance level again. The Qs actually did a lot of what I was expecting. Got to resistance, got to overbought, turned around, came down substantially, and today closed the gap for all practical purposes. So it could be primed to go up. I can't come to much more commentary than that. So again, a little bit between a hard and a hard spot and a rock, whatever. Now the Russell 2000 just simply came into a major resistance area, slipped a little bit after being overbought, and could easily, again, start to rally strongly. There's no gap to close. The gap I was talking about, the Q's just closed from about a week and a half ago. The gap is already closed on the Russell 2000. So other than a reaction down to support and then coming back up again, there's no gaps. So everything is primed to maybe being stronger, quicker, faster, but we'll see. Futures, futures, futures. My bond trade that I've been tracking now for about a month bottomed out at the 88-day cycle low exactly, and it has been an outstanding 88-day cycle. Well, let's see now, the last six of them have all been within a 10% early or a 4.5% early or late time frame from the exact day, and some of them have been on the exact day. It's unbelievably accurate lately. To be honest with you, I don't think the next 88-day cycle low is going to be quite this accurate. I mean, that would be unbelievable. This one's working great. Came up to a little bit of resistance, pulled back for a day. We're steady Friday, and then so far today we're pretty steady as well, down 3 ticks. So even a little bit more of a dip wouldn't hurt anything. We just don't want to come down too much further than, I don't know, 25.5, something like that, 125 and 5/32, which isn't too far away. On the other hand, sooner the better. New highs for the last 2 weeks, the better. And then we need to get through 129.5. Lastly, the most important major upside breakout is going to be 135. That's super bullish long-term. Next chart is going to be the E-mini, which I start this group with. And its commentary is the same as the Spider SPY, except that, remember, there's longer trading days, and that changes the signal somewhat on the E-mini. The chart formations are typically the same. They take longer to form, and the extended trading hours for the E-mini is not necessarily that important, usually. Next chart is bonds. We just touched on that. 10-year notes are almost the exact same situation of bonds. Again, an 88-day cycle has been unbelievable, and it is slightly lower on the day. I'm looking for a rally to start very soon on interest rate futures. It'll make new highs for 2 or 3 weeks. Next chart, crude oil. It's gotten stronger than I expected. Now we are overbought again and new highs again. It appears it's going to try and test the 82, 83 ballpark. Yep, that's what it looks like. And we're already at 79, so it's not very far away. If it does it very quickly, which is possible, it's going to get significantly more overbought, kind of like early April, where it topped out in that price range with overbought conditions, and down it went to 65. So, looking for sell signals. Don't believe this is anything I should be chasing up. I'm expecting it to turn down soon, maybe around 82, 81 to 2. Next, Spider. I'm sorry, heating oil. Wrong one. Heating oil is very strong, very overbought, 86.60. That's pretty high on the scale. Anything above 90 and I'm screaming bloody murder, watch out, it's going to turn down. So 86 is pretty close. Looking for a new downside move to start any moment at around these prices. Next chart, natural gas, sideways trading range. We've had a few sell signals, one buy that worked okay. I think this natural gas is going to start attacking the support area, which is, I'll zoom out for you guys, or in that is. So I think it's going to come down to 240 and 230 without a problem soon. Next, gold and silver provided a bearish engulfing sell signal on Thursday, and I screamed bloody murder on Thursday. The overbought conditions were a warning that that could happen, and this is exactly what I love for sell signals. It is the ER signal, new short sell signal, the red. So we made some money on Friday after Thursday's signal, and we're making a little bit more money today. Looking very good, expecting a challenge of 1,900-ish soon. Next, silver, the same thing. Made a little money on Friday, made more money today from the Thursday last week's bearish engulfing sell signal on silver. We have had some great signals in silver this year. The March lows, two premature ones, but both of those could have made a little money. I'm talking about the whoppers, and that would be March 10th, a whopper. A great sell signal on April 14th, the beginning of a double top. Of course, you don't know that at the time. May 5th was the last rally high. We caught the double top in both highs and a whopper to the downside. We got a bottom bullish buy signal and a rally that was very, very good. And now what's going to happen here? Another whopper? I don't know. It looks very possible. It's overbought. It was in a resistance area. A few things I like a lot. And then you got your bearish engulfing. So I'm calling for a move down to 22.5, and then we'll see if it can hold or not. Maybe not. Next chart, platinum already has turned down a little quicker earlier last week from overbought conditions and a test of a previous bull trend line coming right up underneath it and giving it a little kiss and then drop down, straight down. So no signals, though. A little disappointed in that. But we've had a few fantastic ones. This one was slightly profitable, just a few days, but those are the whoppers I love. Major top after a big move up and the beginning of a big move down, and the exact same thing for this green bottom. These are okay. I mean, they made a lot of money. I'm not arguing with that, but it wasn't the turning point for a huge move. But they all four of these, three sell signals and one buy, weren't bad at all. I can easily tell you that all of the signals I just mentioned, 1, 2, 3, 4, 5, 6, 7, have been profitable. Some of them huge. Great bottom back there. Not so good. Small move, 2 days in a row. And we're not doing nothing. We're going sideways in high-grade copper. I think it started heading south. The next move down is going to break below 367, if I'm right. If I'm wrong, at the moment, we're going to come back up to 4 or a little under 4. That may stop it again, especially if it gets overbought. And then we may have another chance to hit new lows. Next, soybeans. Well, the end of story about that broad double top formation. I'm not going to mention that very much anymore. That's been killed. The market moved way into new high ground, had a reaction, and then moved up into new high ground again. And today is basically again. I'm not sure how high is up with this, but this is very, very bullish. It was a very big sideways trading range. And the first thing that comes to mind, of course, is the climatic change. It could cause soybeans to go a lot higher. I just don't know. But this is very bullish. Oops, I didn't want to do that. Let's go to soybean oil. And I suppose it's going to get dragged along with it. But for the moment, it's overbought today and should have a downside correction. But this situation is getting a little stronger than I would have expected to begin with. Now, we do have a lot of resistance at 70. It's been in that ballpark twice now, April, May, into June, and then dropped substantially. Then again in November. So if we can get another nickel higher or so in soybean oil, it might do it again, especially if it does it quickly and gets even more overbought. Next, soybeans. I didn't want to do that. Meal did get overbought, made minor new highs, couldn't hold it, and dropped down to close lower on the day. And that was Wednesday of last week. So today's the first day of a bounce. Thursday and Friday were down, not a heck of a lot, but down. Looking for lows lower than last week's lows and a test of 380, 370s. Next, corn getting close to overbought again in price ranges, coming close to, not yet, price ranges where it's topped out before. So I'm saying maybe 370 now, 75, 7, maybe even 80. And if it happens very soon and quickly and we're at 60, we could see it being overbought and turn around one more time in that area of resistance. Yeah, that's exactly what I'm thinking. Next, wheat. Something similar, close to overbought. We were a few days ago, Thursday of last week. We are now a little bit above the beginning of the resistance, which was my red zone, but there's more resistance at higher levels, frankly, all the way up to 836-ish, and we're at 857, so 757, excuse me. So a lot of elbow room to the upside if it's able to get way up there to that next significant resistance level. That may not necessarily change the long-term trend, though. Next chart, live cattle. Fantastic sell signal on Thursday, like gold and silver. I think they don't have anything to do with each other, except for the fact they have a bearish engulfing ER sell signal in common, and all three are working. So we have a new low since last Thursday's bearish engulfing sell signal, and I'm expecting it to come down to 171-ish. Yeah, fairly quickly. Next chart, hogs. No sell signal on top during the topping out formation, which I can't say that was a profitable trade. It wasn't. But they do tend to sometimes group. Usually one of them is the highest high or lowest low during a topping out or bottoming out time frame. So maybe we have that. I need to close below 80.33 to get the ball rolling on the downside. And I do think it's down, bearish. Longer term trend is definitely down. And we've got some whopping signals in live hogs over time here, including the huge high back on February of 22. Wow. Yeah. Next, OJ. Well, there goes my morning breakfast orange juice. This thing is skyrocketing. We have a 90.5 RSI. I just got through saying when it gets to 90 or higher, I'm screaming bloody murder. This thing is about to turn back down, and fairly sharply and quickly. It might gap down. It's gotten too strong, too quick, too fast, et cetera, et cetera. That's why you get the high readings on oscillators. And it is a very important warning not to go jumping onto long side of the market situations here. Maybe a put might be interesting, a cheap one. They could do extremely well, real fast, percentage-wise. If there are options on OJ, I'm not even sure of that. Next, but the strategy is what counts. Cocoa. Actually, no comment. Next, cotton. Boring is the best thing I can say for months now. We are overbought 3 days in a row. We're right up against resistance. This could be, and maybe a little higher. We just might see 90 or 88.5. But it looks like it's turning around and starting to dip back down. You can't tell that by the slightly higher quote we've got at the moment, up 0.69, but I wouldn't be surprised if it was going to start turning down very, very quickly. Today, tomorrow, this week for sure. I expect this week. Next chart, sugar and overbought now in a resistance area, broad trading range, created a double, or maybe you can call it a triple top if you wanted. And I'm thinking it's going to test the 22 level very soon, and maybe all the way down to 20.40. Next, coffee, a little rally out of oversold conditions, and a couple of buy signals that, sorry to say, we're the lowest lows, but very close. And now we have the highest high since those buy signals, and they didn't do any good. I mean, you may have made some money on the second one, but probably not the first. I'm looking for possibly a little bit more of a rally, but this is a big sideways, for the most part, trading range since November of last year. Next is the E-mini. We're back to the beginning. You guys have a great day. Talk to you tomorrow.